Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. This video is going to be focused on the S&P 500. We're going to take a look at quite a few very interesting charts in this video that highlight the type of market environment that we're currently in and what phase of the bull market we're currently in. So hopefully by the end of this video, you'll have a pretty good idea of where we think we're currently at with equities in this large bull run and where we think we're going to be heading in the next 2-3 weeks and exactly the reasons why. Then towards the end of the video, we're going to take a look at what's happening in the short-term technicals of the S&P 500 as well as some of the charts that we've been looking at, including the 10-year yield that's making some big moves here that's going to have a massive impact on the markets, and the dollar that made a major move the other day. If you are new here, make sure to smash that subscribe button. We make these videos multiple times a week, covering the markets, covering any type of opportunity that we see in the financial markets. And most importantly, I teach you how to navigate through these markets successfully using all these charts, data, and indicators to figure out exactly where we're heading next. So now, without further ado, let's get right into it. All right, so let's begin with this chart here, a very important chart to anyone who's looking to understand what's happening in equities right now. This is a bull market price channel. This is something we've been looking at for the past few months here to illustrate exactly what type of environment we're in. You can see we've got quite a few reactions, and throughout the past 10 years of trading, this channel has acted as a level of support to define the uptrend and also as a level of resistance. More specifically, March 2021, we had a blow-off top move right here through that channel resistance. We broke through it, telling us that the markets were no longer going to be trading within that channel, and we're actually going to outperform, at least in the short term, outperform the gains that we've had since 2010. Now, from a technical analysis standpoint, that's a big bullish move. It's a healthy breakout, retest, resumption, and all that whilst keeping the same powerful momentum that we've seen throughout this big rally. So that's a bullish short-term development for the S&P 500. But this is a weekly chart, right? So when I say short-term here, that's referring to the next few months of trading, not the next few weeks, but leading up into 2022. This is a bullish development. But if you're looking at this with a long-term lens, we zoom out here, this is not particularly good news. It's often the type of move that you get towards the end of a bull market, right? This is something that we've talked about quite a few times on this channel. We often get these types of moves with a price channel that defines a bull market here in 2008. The S&P 500 trades within that range for quite a few years before making a large blow-off top move above that trend line and eventually peaking a couple of years later. And we had the same thing back here on the NASDAQ 100 back in the 90s. I'm doing this very quickly here. It's not going to be very well defined. Trying to get as many reactions both at the bottom of the channel right here. You've got three big reactions here, and at the top of the channel. Again, you've got quite a few nice reactions before a blow-off top move, a euphoric move, which leads to a period of outperformance for a couple of years before leading to a significant top. Now, again, looking at tech and what's happening right now, we have a similar type of structure. Does that guarantee that the exact same thing is going to happen? Absolutely not. We're not basing our entire thesis on this move, but it speaks to the type of environment we're in. We're in a euphoric environment towards the end of a bull run, and we're beginning to see signs of overextension and complacency. But in terms of the macro environment, it doesn't look like we've seen the top just yet. We're beginning to see interest rates here break out. That's good news for the economy. That's showing that investor confidence is coming back. Now, that's not guaranteed yet. This can still turn around, but seeing a breakout like this, we're back to a standard scale on this chart with a nice well-defined downtrend line here. We have a clean breakout that signals that we're potentially going to be seeing some more upside on interest rates here as investors begin to sell their bonds. Now, in the last video, we discussed the NFP report that was going to come out on the 6th of August, and we talked about the fact that it was potentially going to be better than expected and send yields higher. Now, the NFP report was better than expected here, so that's showing economic strength, and that is damaging the short-term thesis for deflation. Right? There's a lot of deflationists out there expecting yields to begin crashing, bonds to go parabolic. Now, we think that does have a high risk of happening in the next couple of years, seeing a major deflationary event with the current macro environment with a lot of consumer debt. That's a deflationary environment. And unless we see sustained excess government spending, I think we'll be heading into deflation before eventually we see fiscal policy step in to balance those forces out. But right now, it does seem like the economic recovery is intact and actually relatively strong, and that could create some more upside in yields, which could have a big impact on the markets. In fact, in the next premium episode, we're going to talk about exactly why we think we're going to see a larger rally in interest rates before we ultimately see a big deflationary event, which we expect to happen somewhere in the first half of 2022. So this is a lot of information, but the message I'm trying to get across here is that we're in an incredibly strong market, that we've broken out here, and that we're eventually probably going to see a long-term top somewhere in the next couple of years, and that it's now our job to successfully know whether or not the market is about to top. Seeing a breakout like this in the 10-year yield tells me investors are confident. It doesn't tell me that the market is going to top just yet. In fact, in an environment like this, where you have such a strong market and you have a breakout in interest rates with investor confidence coming back, as I mentioned in the past few videos, that could potentially be leading to a large risk-on move in the markets here, leading to a broad equity rally into the end of 2021. Now, one other very important metric to use when identifying long-term tops is the AAII bullish sentiment survey, right? So this measures the sentiment of the overall market. And so what we're looking for in this indicator here, I've put the 50-day moving average here of the AAII bullish sentiment survey so that you can get an idea of the aggregate sentiment that we've had over the last 50 days. Because just taking a look at the individual readings is not going to give you much information. It might be able to predict short-term drops, but if you're looking to identify bubble euphoric type of environments, you're going to want to take a look at the sentiment over an extended period of time. Over the last 2-3 months, you can see here during the dot-com bubble, which was the last big bubble that we've had, we saw a large rise in this 50-day moving average leading up to the top. You can see the moving average actually reached 50% at the very top of the bubble. So currently we're sitting at around 40. So we're in a very bullish environment, but not yet euphoric like we had during the late 1990s. So in summary, we're approaching excessive bullish sentiment, but we're not quite there yet. Now, the one chart that's beginning to raise some concerns in the bullish thesis is the dollar here. Now, more recently, we had a nice large rally here on the dollar that actually improves the technical structure. So over the last few weeks, we had this nice bearish rising wedge here that was developing as the dollar was approaching resistance. That was a bearish setup. In fact, we got a breakdown and a sell-off, but you can see what's happened here. The DXY found support, and we've seen a rally here following the NFP report. So we're going to see what happens over the next few weeks. Is this just a temporary move following the NFP report, and we're going to continue the downtrend that we've been expecting considering the current easy money monetary environment, or are we going to see a breakout? So that's something that we're watching. This is definitely something to watch. We have a higher low, so that's a bullish technical development. If we begin to see a rally here and see a higher high, that starts to really improve the technical structure on the dollar and damage the bullish thesis for equities. But for now, it's much too soon to start saying that the dollar is starting to switch into a bullish environment. We still have this strong zone of resistance here. Look at all these big consolidation zones, big reversal points here. This is major resistance, and DXY hasn't shown that it's been able to clear that resistance. Very easy money environment suggests that it might not be able to. So I hope all of that was clear for you guys. If you have any questions, any comments, make sure to leave them down in the comment section down below. Make sure to go and check out our service at gameoftrades.net if you haven't already. We have a free trial if you want to test out our service. Read the last few articles. We've recently posted a great article on Bitcoin covering on-chain analysis, talking about how yields could impact the price in the short term. So that's about all I wanted to cover in this video. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe to the channel if you haven't already. Now, in the meantime, good luck on your trading and see you next time.